important early warning system that this was coming, and it will come. I do not think, however, it is transformative of the entire industry. I think you're more likely to segmentation, in which a substantial part of the industry will be available for people to do decentralized peer-to-peer financing, but there will continue to be a large number of people who will need the more active intermediation of the banks. And so I believe you're going to see those two together. And part of the problem is, if you look at the way the public behaved in our last crisis, it is not encouraging. I have felt in the political world that there is too much emphasis on blaming politicians and not on recognizing that much of the behavior that politicians engage in that is not what it should be is driven by the voters. Politicians who are doing irresponsible things are very often reacting to the irresponsible desires of the voters. I was confronted once by someone who wanted me to explain how I could justify how politicians behave, and I said, I don't. I agree that politicians make a lot of mistakes. The media often exacerbates that, but the voters are no bargain either. Well, it turns out neither are the depositors. And so when we talk about empowering the individuals, remember that there are going to be some individuals who shouldn't be given that power. And the last point I would make is that that was a problem with Signature. One of the steps Signature made, Emmanuel had mentioned to me early on that we were in advance here, was to enable our depositors who wanted to move in a decentralized direction, who wanted to deal with each other with crypto. We got penalized for that, even though we were at no risk whatsoever. But because we were publicly identified correctly as a leading collaborator with people who dealt in crypto, downfall.
I'm going to leave all those comments up in the air. Sir Howard, you were a pioneering regulator, and it was in your watch that Northern Rock happened in the UK.
Sorry.
What?
Sorry. It wasn't. Is this on?
Yeah.
It's automatic.
Yeah, it wasn't.
Uh-huh.
No, I left a FSA in 2003, and Northern Rock failed in 2007.
This is interesting. I just asked ChatGPT, was Northern Rock during Sir Howard Davies as FSC chairman? Yes.
It's total.
Sir Howard Davies served as chairman from 1997 to 2003, which included the period. There's a syntax problem here because it says it includes the period when Northern Rock was in operation, yes, but not the
operation.
Yeah.
Absolutely. It was
so
fine.
the reply was out of context. But
sorry,
then
I just had to intervene.
Absolutely.
My alternative was to sue you. Just thought it was better just to get in before consulting my lawyers. But
the authority with which I was certain that you were comes from ChatGPT. So there's something to be said there. But you've seen some of the early iterations of crises of this nature, liquidity, funding problems, and so on. Now, apply the mind that you had as a regulator in your time to what's happening today in the US. How would a UK system have dealt with it? What were the mechanisms available to you to have contained, a liquidity or a funding crisis, in your system?
On the two important points that Barney Frank made on liquidity regulation and on the deposit protection, fundamentally, the UK system is broadly the same. Actually, UK deposit protection is somewhat lower than in the US. It's about £80,000 as opposed to $250,000. But then if you think about the relative size of the economy, etc., it's not that far off. And liquidity regulation is largely driven by Basel rules. The liquidity coverage ratios are calculated, are set out by Basel. I mean, they're interpreted slightly differently from country to country, but not fundamentally. So I think in those two respects, the UK system would not have been any fundamentally different from the US system. I think there are two areas, however, which are somewhat different. And I did mention briefly that in my remarks earlier, and that is the treatment of interest rate risk in the banking book, which is handled differently in the UK and Europe from it is in the US. The US have not taken that into the Basel Pillar 1, Pillar 2 framework, whereas our regulators have. And I think that is relevant to Silicon Valley. I'm not sure it's relevant particularly to Signature or First Republic, but it is relevant to SVB, where they had a significant unhedged position on US treasuries. That would, I believe, not have been possible for a UK bank to do that. The other thing, of course, though, is the different structure of the banking system, that we do not have regional banks in anything like the same way. And we don't certainly have the degree of concentration risk which Silicon Valley had. We would not have a bank with that degree of concentration risk on one industry sector, on the high-tech sector. So that just wouldn't feature in the UK, and I think it would not be allowed by our regulators, actually. So there are certain aspects of the UK system which would be different from the US, but some that are the same.
I very much agree with all of that, and it is important to distinguish Signature and First Republic from Silicon Valley. They had the exposure on the bonds the treasuries that we didn't have, and there was a concentration in technology and customers that the other two did not have. So yes, those are the other thing I would say, though, as to liquidity, and one of the arguments is, well, Signature, we didn't do enough to protect the liquidity. Given the volume and speed of deposit withdrawals, any effort to have protected to make sure you had enough liquidity would have substantially diminished the bank's ability to function. I mean, that I don't think going forward, if there is no protection against that degree of deposit withdrawal, I think liquidity demands then they reach the point where they significantly diminish the lending capacity of the banks, which I'd rather deal with the insurance side than that. The other thing is, I want to go back to Canada, and I whispered to my colleague that Canadian financial institutions are so well run and powerful that they now dominate the finances in Boston, both banks and insurance. They have kind of colonized us to a great extent. Our big sports arena is the TD Bank, Toronto Dominion. But that also was an argument against some of my colleagues on the left in America, and it has to do with regional banks and the vulnerability that Howard mentioned of regional banks over-concentrating. If you have only what Canada has, I believe, is several very large, very well-run banks.
Four.
Yeah, that's a degree of concentration that would make some of my friends on the left in America panic. But here's the deal. That means that there are no regional banks to over-concentrate. When you have four national banks, you have a built-in diversification. And so the argument that we need to have more regional banks, it does open us to that danger that Howard mentioned.
Now, concentration risk of the nature that both of you are talking about, it's a reality in huge countries. The US, China, we see regional banks, very clear customer base and so on. Here, just to put in a comment in here and what technology is making possible. In a number of Asian countries, in Hong Kong, in Singapore, in Malaysia, the rise of digital banks. And there is this ability to procure a certain type of client base and create a different type of concentration risk where you have institutions that can actually be not regional, but very specific in their customer base in that way. With your retail banking head, what is AI making possible in terms of the customer profile of banks, going forward, especially?
Sure. So I actually, if I may ask a quick question of Sir Howard and Barney here in terms of digital, and to your point in terms of digital banking, I just want to clarify with a digital banking license like N26 and Revolut and who have created banking entities, digital banking entities and neobanks, they don't fall under the financial or a deposit protection scheme, as far as I'm aware, in the UK at least.
I didn't get the question.
Oh, I'm just coming to that. Do digital banks, or are digital banks or digital banking customers protected in the same way as in traditional banks?
Well, if they're banks, yes. If they're not. So in the case of Revolut, for example, Revolut is a bank in Lithuania. So I presume it's protected in some way by the Lithuanian Deposit Protection Scheme. It is not a bank in the UK. It has applied for a banking license and has not so far been given one. And we may speculate about why that is, but the regulators have so far not authorized it as a bank. I think they have concerns about governance and finance. I mean, a whole variety of things. But they have not. And Revolut have been public. I'm not making, they've been public about the fact that they've been asking for a banking license for some years and have not been granted one. So they are not subject to that. So they're essentially a payment system rather than a fully fledged bank.
De facto, the bigger banks, the depositors in the bigger banks perceive, and correctly, that they are better protected, both because of the diversification, so you're not industry worried, but that was only Silicon Valley. The others were not that industry concentrated. But the other is the perception that the bigger the bank, the less likely the regulators are to let it falter. And so that's why there is, as everybody acknowledges, in fact, you can even argue, if you are the trustee of other people's funds, you may have a fiduciary obligation to move your deposits to a larger bank and to diminish the risk. So that's a de facto increase in protection for the larger banks.
At the same time, especially in a lot of Asia, there is this whole move towards financial inclusion, which institutions will not be able to reach out to unless they're concentrated. They go after a certain client base and build that. Because the broad-based institutions are too expensive, to go into that sector. Has there been any thinking along those lines in the jurisdictions that you come from?
Well, it's not quite that way. I mean, I think that the way I would see it in the UK, and sort of building also on what Barney just said, is the institutions we don't have are the ones that have been problematic recently in the US. In other words, the smaller banks, but nonetheless quite chunky, nonetheless $200 billion type banks. In other words, quite difficult to be a snack for the larger ones. Whereas we tend in the UK, and this is true in most of Europe actually, and it's true in Canada and it's true in Australia, you've got big banks, as were the four pillars of the system, if you like. And then you've got small ones sort of snapping at their heels, but which are such that if there were a problem in them, then they would almost certainly get kind of swept up quite easily by one of the big ones. And indeed, Silicon Valley Bank UK was an example because, that was a separate bank. I mean, it was a subsidiary as opposed to a branch. The Bank of England had actually insisted on it being a subsidiary, whereas they could have allowed it to operate under a branch, but they didn't, which they are now rather pleased about.
Sell it for
and-
$1, sell it for £1, yeah.
And they sold it for £1 to HSBC, and it was not large enough for it to be a problem. HSBC did not get any indigestion from doing that. So I think the problem is when you've got these ones in the middle, which are too big to be a snack for the big ones, but which are and therefore there is an issue on deposit protection, and we don't frankly have that industry structure.
Yeah, by the way, one other issue that is now emerging in America, I don't know whether it's true elsewhere, and that's the commercial real estate. If you're looking for a problem going forward, and here I have a problem with the regulators. The federal regulators in America, particularly the Federal Deposit Insurance Corporation, has actually been an obstruction to banks helping with one of our most important social problems, which is the increase in the housing supply. The FDIC has taken a kind of undifferentiated view that commercial real estate lending is a bad thing. And they forced our bank and others to reduce their lending for affordable housing. I cannot think of a stupider thing for the federal government to have done. But now it's even exacerbated because there is this correct perception that commercial real estate in general could be a problem area because of people not going to the offices. But once again, there's a very clear distinction. There is a problem with commercial real estate as opposed to residential. And there's a fundamental point that they miss. It is possible, and indeed more and more people are working from home. But while you can work from home, you cannot live at work. And so the market for residential is stronger than they're prepared to recognize. And I plan to start a campaign with a number of others to say that the FDIC has to make this distinction. And in fact, there is a surfeit of commercial real estate, office buildings and hotels, which can be converted to residential, and multifamily residential is a major social need in America today, and that's going to take financing. So that is an issue that we will be dealing with going forward, and I'm going to hope to get some of my former colleagues to focus on the FDIC and insist that they make that distinction.
Now, this conversation has many legs that it's standing on at the moment, and we can go down any one of them. There's so much to discuss. So Barney's point of commercial real estate and future potential crisis, that's another conversation that's going to take place after this opening keynote. And then what's possible with AI, with Theo, will be a separate conversation on the technology front, drilling down, in terms of how the institution itself will look like. And some of the issues that I'm very excited about are things like what's happening in decentralized finance. It's 24/7. It's continuous liquidity. The disciplines are not found in traditional banking, and how will we see that convergence eventually taking place, and what can traditional banks learn from decentralized finance? So in the next 2 days, we're going to drill down many of the issues on all these fronts. At this point, I want to thank our panelists, and I'll ask my erstwhile co-host to conclude the session for us.
Very good. Thank you very much. I always have the job of squaring the circle. I think we covered most of the perspectives of banking, and it's pretty difficult to summarize. But there are three things that struck me, which may be interesting for you, is that the recent issues have all been around deposits and liquidity. And the regulators, or former regulators here, seem pretty confident with that. And in fact, the regulator has found a solution of actually saving the troubled banks, even the size of Credit Suisse. You may argue not in the most imaginative way, but certainly they solved that. So traditional banking seems to have emerged stronger from the various crises. And on the other side, you have, interestingly enough, what struck me second, that the decentralized financial sectors are the neobanks. They're all trying to get a banking license when having a banking license essentially is you can take deposits, is actually the cause of all the problems. So I'm not sure that the neobanks are not eventually going to get to a point where they don't want to be a bank. They actually prefer to operate as a non-bank. And the third point that struck me in the discussion is that to date, the traditional perspective on banking and the neobanks have relatively little in common. They tend to cooperate where it is intelligent, but they tend to compete where it is not to their advantage. And I think the one thing that struck me most is that if the world has a total sum of financial services and the neobanks take a share, then the next crisis will be that the traditional banks will not have enough business to fund their traditional lending. They will move into more risky financial transactions, and that will create the next crisis. So what I take out of here is that we have achieved very high level of regulations and supervisions and crisis solutions in traditional banking. I'm not sure that everybody sees the decentralized and the finances and neobanks as the real threat they are, namely taking away the business that would undermine the banks. But as I say, as Emmanuel Daniel said, this is covering a very wide perspective, almost the entire banking system. So rather than being in the way of your coffee break and some morning snacks, I would like to thank everybody on the panel because we have exceptional competence here, and we are covering the most important issues at helicopter level. And in the next few days, we're going to drill down, and our panelists will be here. We'll drill down into more specific levels, and should be a very exciting conference. So I think, thank you very much. And thank our panel very much. Most enjoyable. And have a good coffee and a good break, and we will
join us in he's finding it difficult to find the pause, but please join me in thanking our keynote speakers and our distinguished guests, panelists for a very hearty conversation. And I was holding back from pursuing it even further. So ladies and gentlemen, thank you very much.
Thank you to all our speakers and moderators for the insightful session. Ladies and gentlemen, we will now have 20 minutes coffee and tea break, and we kindly ask you to return to the rooms by 11:30. And please remember to take your personal belongings with you and ensure that you're back in your seats on time for the next session. And kindly note that, and for those invited to the CEO Luncheon Dialogue, please proceed to the Garden Gallery room at level 1. And for your convenience, signages has been placed outside the ballroom. Ushers are also available to guide you to the Garden Gallery. And for those who would like to attend the Transaction Finance Reinvented Conference, please proceed to ballroom number 3 after the break. And those attending the Financial Technology Innovation Conference, please proceed to ballroom 2. Thank you, and look forward to seeing you at the 2 conferences.